Hello traders, Rich here and welcome to a new episode on how to analyze any chart from scratch without using any indicators, just by applying basic price action concepts and market structure 101. So let's get started, and as usual, cheers. Today we have episode number 20, which is a stock, Tesla. For those who aren't familiar with the series, don't worry, I'll make sure to attach the entire playlist, which includes all the videos by order, in the description below. So enjoy it, and for those who are watching this video, let's do it. For those who already know, we always start from the higher time frames, which we call our rejection time frames, the weekly and daily, to know where we stand in the market. Are we overall bullish, bearish, or stuck inside a range? And of course, for those who watched the previous 19 episodes, find this boring. So let's do it real quick. As price approaches the lower bound or support, it can be horizontal, just like this one, or non-horizontal, just like these two. We'll be looking for buy setups. Vice versa, as price approaches the upper bound or the resistance, it can also be non-horizontal or horizontal. We'll be looking for sell setups. So let's do it. And for those who already know also that we always draw our supply and resistance first, then we go for supply and demand zones. We have a demand zone when we have an aggressive movement upward from it, and the supply zone, of course, when we have an aggressive movement downward from it. Last but not least, we go for trend lines, which are our non-horizontal supply and resistance. I find this one quite interesting, which is the case of most stocks and also crypto instruments, that we can't really find typical supply and resistance because the price has been trading in one direction in an aggressive manner. It can be upward or downward. In this case, and unlike Forex, where you have like enough data to connect as many swings as possible to identify a key rejection, supply and resistance, like here we can't really find any. So a supply and resistance, a typical one, is when we have many failed attempts, and as per my trading style, at least 3 to break or to break above or below a certain level or area. And I call it a support and resistance because we can connect like 2 swing highs, 1 swing low, or 2 swing lows and 1 swing high. That's why I call it support and resistance. So I don't call it as a support or as a resistance. It might be acting now, for example, like this one is acting as a support now because price is above it, but in fact, it is a support and resistance. Okay, so like unlike supply and demand zones, it is a supply or a demand. It can be like both. Okay, and once a supply is broken upward, it's no longer valid and should be deleted. That doesn't become a resistance, just like a support and resistance, right? So anyway, since we don't have typical supply and resistance, we go for what? For those who watched like many cases before, we go for round numbers. And as I always say, and as I mentioned last time, feel free to pause this video, try to draw it by yourself first, and then click on play again and see if you got the same results as me, because like I'm trying my best to make it as practical as possible. Okay, so let's start with drawing our round numbers because we don't have supply and resistance, but of course we only keep the ones that makes sense. Okay, so we don't want to draw a round number like and it looks random on our chart. So first of all, we have to take into consideration which instrument we are looking for, right? So in this case, we are like trying to draw round numbers on Tesla. So we can't really go for 1 or 1.2 round numbers or 1.5. We can go for 1 and 2 and 3 maybe on Euro USD. However, on Tesla, it's trading between 100 and 1.3K. So if I go to 1 or 2, like it might be here, it doesn't make sense. It doesn't help me or add any more info to my chart. So I have to take into consideration where we are currently trading. And this one is trading between 100 and like 1K or 1.3K. So the strongest round numbers in between these two, 100 and 1K, are obviously 1, 2.5 maybe, or 250, 500 is a very strong one, 750 is a medium one, right? And the 1K is a very strong one. Next, of course, we would have the 1.5K or 1500. So let's do it really quick, right? So we've got the 100. Here we go. Fantastic. We have the 500, which, as mentioned previously, is the strongest among these like in between. And of course, that's an entire area. So we have to draw it in a way to make sense. We can see that the price rejected it here, then broke it upward, and here we've got some rejections. So if you make it a little bit higher, we can even connect these ones here. So it's an entire area from 500 to 550. And as you can see here, as price approaches it again, it's a strong round number, and we can see rejections here. Maybe on daily time frame, we can also see the swings better. But you've got the idea. We have rejections here and here as well. So it's a strong one. Of course, we forgot the 250. Let's do it real quick. And as you can see, it's not as strong as the 500, which we saw previously. As you can see, the 250, like the price didn't respect it at all, kept trading higher, broke it upward, and kept moving higher. So if you want, you can delete it. That doesn't really add more info, and the price isn't respecting it previously, didn't respect it previously. Next, we've got the 750, and we can see that price respected this one previously. So let's keep it. Here we go. And of course, it's an entire area. And we've got what? We've got a minor, or like it's quite good, but like a minor because we didn't have a big rally previously. So we've got a rally base and then a rally again, and it's an aggressive movement upward. So this is actually what? A demand area. Okay, and it's quite very, very strong, just like this one previously. Here we had a demand, aggressive movement upward, and then this is what I meant by not my minor one, but like here we have a demand zone. Unlike here, we don't have a demand here because we didn't have an aggressive movement upward, just like this one. Then we had a base because price got stuck inside a consolidation. We can see it better from daily, right? Because now we can see like only one candle, but on daily it can be like five candles, so it might be a whole range. Then we had another big movement upward, and then the price respected this demand area. It didn't test this one, respected this one, which is the 550. This is why the price didn't test the 500, instead test this area 550, because it's a demand area that might hold the price before reaching the 500. Anyway, let's focus on the current price action, right? As you know me, I don't like to go like it's very easy to go like back in history and say I could have done that and I could have done this, right? Let's keep it as clean and as practical as possible. So we've got the demand here, but I will not draw it. And you know what? I'll draw it like this. And let's go for, okay, let's go for 800. 800 it is. Like this 800 isn't a strong round number, right? As mentioned previously, 700 is a stronger one. But just like previously, the price can reject this demand before retesting the 500, which is also this previous high, also this previous high, just like the exact same example, right? So as price approaches this area, we'll be looking for buy stops because it's a very strong demand area. And the good thing is, just like this one also, it's a demand area, and we are looking for trend following buy setups, which is like the best like the best demand areas with a higher probability, like unlike when a demand area is we are looking for a full reversal, right? In this case, it's true, it's bearish, but we are looking for a buy setup around this demand area to what? To catch the overall movement again, to catch the next impulse movement upward. Anyway, let's keep moving forward. Next, we've got the 900 is not as strong as the 1K. So I'll highlight the 1K, of course, and then we have something very, very interesting. Here's our 1K, and here's our what? Here's our 900. And the reason why 900 is very interesting is because we've got this previous high, right? We've got this gap. Okay, so this entire area is a very, very strong area that might hold the price. And we'll be looking for buy stops starting from here. Of course, this is the first part or the first piece of the puzzle. Next, we'll put the puzzle all together. But for now, just by drawing our supply and demand zones, by checking the previous highs and lows and round numbers, like things are getting like clearer, right? So we've got a gap here, which is considered also what? A strong demand area, because the demand area is when we have an aggressive movement upward from it. In this case, okay, we have a gap, right? But it's also considered as an aggressive movement. Okay, so we have a demand here also 900, the previous high. Okay, so and now we've got the all-time high, which is around 1.25k. Here we go, which is also a round number. It's not as strong as the 150, right? The 1500. I'll draw it anyway. Here we go. So now, and as you can see, price respected this one very well. So we'll keep it. This is our current all-time high. Of course, if broken upward, the 1500 is a very, very strong round number. Next, let's go for what? For our non-horizontal supply and resistance. And it's very simple. I know that many traders got confused on how to draw it and so on. Zoom out. In this case, like, it doesn't matter if you zoom out or not because we don't have any data here. So let's keep it this way as it's cleaner. So try to find like what we call the outer trend line. So don't go for like very, very small ones and stuff like that. Okay. Try to go for the outer ones, which engulfs the overall movement. Okay, just like a moving average. I don't like moving averages because like it crosses like the price like this. It would be like this, right? So I don't like moving averages, even though it might sometimes act as a good dynamic on horizontal supply and resistance. I always like to go for trend lines. Okay, to know where is the upper band and lower band, and this one is very, very clear. We've got this big impulse movement upward, correction, and another big impulse movement upward. So we are currently in a correction phase, right? Trying to what? Trying to catch the next impulse movement upward, which would result in a new all-time high in this particular case. And in this video, in a bit, we'll take an idea about where might Tesla go and like end the next impulse movement. Of course, when you draw your first trend line, if the price is going upward, first draw the lower bound. If the price is going downward, draw the upper bound. Okay, so connect the lows first in a case of a bullish trend and the highs first in the case of a bearish trend. Next, you click on it, you press and hold on control, and here we go. You make an offset for it. And as you can see, it lined up perfectly. So if you drew this one like around here, you could get an idea about where Tesla might get rejected. And I posted, I guess, yes, I posted one about Tesla. Let me search for it real quick. Here we go. I posted one when the price was sitting around the upper bound. This is it, right? So I posted this one that we are now around the upper area. You can read the description here, right? So we've got the previous high, rejection, now around the upper round trend line, and we're expecting the price to go here. In this case, when price retests, we'll be looking for buy setups. So this is how you can get an idea about where you might see a rejection. Okay, so this is first, the price rejected this one, which is the all-time high, which is the intersection of a strong round number 1-50 and the upper brown trend line, which I consider an overbought area. So now we're in the correction phase. We have this first impulse. We might also see another one downward like this, 2, and here we go, a full reversal, 1, 2, and then we want to catch the next one. Of course, the price move like in similar patterns, but not very identical. It's like the shapes are different, okay, but the overall movement is almost the same. So while waiting for a correction, it can be like different than this one. Moreover, this one can still reject like this and trade higher. We don't need to see a very flat correction just like this one. It might be like very small one, like a flag, an impulse, a correction in the shape of a flag, and then a movement upward. Okay, so this is basically it. And you know what, let's zoom into the direction. But before we do, okay, so from where, let me show you the projection. Okay, so we've got this movement. And as mentioned previously, we are looking for buy stops now. It's an entire area where we'll be looking for buy stops. And why? Because it's the intersection, this area here, of the previous high, this gap, this low round trend line, and the 900 round number. We know that it can go up from here, but as price approaches this area, we'll be looking for buy starting from now, knowing that it can still dive in and go flat to test the lower bound before going higher. If this happens, right, where would be the next target or next rejection where we might see this movement downward? Very, very clean. It's the intersection of the 1500 and the upper brown trend line. And if you want to make a projection for it, here we go. From here, for example, to here, let's make it in orange. And let's see from here to here. Here we go. This is it, right? So Tesla is moving in like big impulse movements, just like this. And if you make this one like this, here we go. This is showing you the overall impulse. Anyway, it's the same. Why? Because it's the distance between this lower one and this upper one. No matter where like you make it higher or lower, it's the same distance. Okay, so this is basically, of course, unless the movement is more aggressive, then it would be like become shorter. But you've got the idea. And anyway, even if you don't like make a projection like this, you can clearly see that this is the power of adding many confluences together. In this case, we have the 1500, which is an even stronger round number than the 1250. And it's also like intersecting with the upper brown trend line. So that's it from daily. Let's not like spend more time here. I don't think we can add anything more from daily time frame because like we already gathered many info on weekly time frame. All what we know is this is an entire area where we'll be looking for buy setups, just like the 500. And I keep on saying it's very, very similar to the 550. We have our previous high. We have what? We have our previous high of this one, right? And this previous high is for this one. We've got a demand area, which we saw from weekly. We've got a demand area, which we saw from weekly. We have the 500 and its offset. We also have the 900 and this lower brown trend line. So very, very similar to the previous case. So now we don't need to zoom into H4 because I guess we can draw a trend line here, but let's zoom in anyway. We can see that we can draw this one here, right? And here we go. This is it. Okay, we can draw it like this. We can extend it as much as we can. And for now, we can see that the price is forming like a horizontal rejection, forming like a descending triangle, right? So if the price breaks it downward, then we might see a bearish movement around this area, right? Or if the price breaks it like this, then the bulls would take over and the impulse might start from this area. But we know that we might see this movement just like previously, just like we saw from weekly, from weekly time frame, then we can look for buy setups. So trading is reactive and not predictive. So don't try to predict that, okay, well, on support, we'll be buying right away. Always wait for the buyers because now clearly the sellers are pushing very hard. We've got this big aggressive impulse movement downward. It is a supply and the price retested it, rejection from it, right? So it's a very, very strong supply zone. Look at this aggressive movement downward, and we are now stuck inside this range and this shape of a descending triangle. If broken downward, right, then the bears would remain in control, and then a movement till this area would be expected, which is we are still bullish, right? Our still is a correction phase. As long as Tesla is trading here around this area, doesn't break below the 800, we are still fine, we are still bullish. Instead, we are looking for buy setups. We know that we are in a correction phase, looking for buy setups to catch the next impulse movement upward. So what again and again, because like I guess like this is it for Tesla. We'll not be zooming into lower time frames because everything is clear from daily, which is also visible on H4. I don't need to zoom into lower time frames because this is acting as a horizontal resistance for lower time frames. So let's keep it this way, especially for stocks. I always like to go for a long-term investment. So in this case, we have two possible scenarios. The first one is if we have a movement like this, of course, like even if we have a break and then a movement like this, then a break above it, then the bulls would take over. We can look for buy stops here after this break. Or if we have a break below this area, then a movement till depends on how flat or aggressive would be, right? Till this support area, it's an entire, here we go. It's an entire area. We'll be looking for buy setups around it. Okay, so I'll draw the two possible scenarios here. The first one is like this. The second one is like this. Okay, that's it for Tesla. Best of luck, and I'll see you on the next one.